Every trader enters the markets with one goal: to make money consistently. But the brutal truth is that most never get there. They start out with excitement, driven by the dream of financial freedom, only to end up frustrated, confused, and often broke. The reality is that trading isn't just about making profits on a few lucky trades. It's about creating a repeatable, disciplined, and structured approach that produces results over time, even when the market feels unpredictable. Becoming consistently profitable is not about predicting the future or finding the perfect strategy. It's about becoming the kind of trader who can operate profitably under uncertainty, who doesn't rely on emotions or randomness, but on skill, risk control, and self-awareness. This is the journey from gambler to professional, from hopeful to strategic. And in this video, we're going to break down exactly how to actually become consistently profitable as a trader in a way that's brutally honest, deeply practical, and grounded in what really separates winners from losers in this game. Let's start with the truth. Most people don't want to hear trading is one of the hardest ways to make easy money. It looks simple from the outside: buy low, sell high, take profits, repeat. But beneath the surface, it's one of the most mentally demanding games in existence. The markets are designed to take money from the impatient and transfer it to the disciplined. That's why about 90% of traders lose money, not because they're dumb or unlucky, but because they underestimate what it takes to sustain profitability. They focus on profits instead of process, on excitement instead of execution, on prediction instead of probability. Most new traders approach the market emotionally. They chase quick wins, jump between strategies, or over-leverage their accounts trying to double them overnight. They think being profitable means finding a secret indicator or a holy grail system that never fails. But the real professionals know something very different. The holy grail isn't a strategy, it's you. It's your ability to stay consistent, patient, and rational when everyone else is reacting emotionally. The moment you stop chasing profits and start mastering your process, you begin to cross that invisible line between being a losing trader and a consistently profitable one. The biggest difference between consistent and inconsistent traders isn't in their technical skills, it's in their mindset. Trading is 80% psychology and 20% strategy. Anyone can learn to read charts, indicators, or patterns, but very few can handle the emotional roller coaster that comes with real money on the line. Fear, greed, impatience, and revenge trading are the real killers of profitability. They make you close winning trades too early, hold losing trades too long, and ignore your plan when you should be following it strictly. A consistently profitable trader treats trading like a business, not a hobby. They accept that losing is part of the game. They don't attach their self-worth to the outcome of a single trade. They don't get overly excited when they win or crushed when they lose. Instead, they focus on executing their plan flawlessly. Every trade is just one of thousands they'll take in their career, one piece in a much larger puzzle. Emotional neutrality is their goal. They understand that the market doesn't owe them anything, and no amount of hoping or praying can change the outcome of a trade once it's placed. To become profitable, you must master emotional control. That means sticking to your risk limits no matter how confident you feel. It means walking away after hitting your daily loss cap. It means avoiding the temptation to make it back after a losing streak. Most traders lose not because they lack skill, but because they can't control their reactions. The moment you master yourself, you master the market. Every consistently profitable trader has one thing in common: a trading edge. An edge is a repeatable condition or setup that gives you a higher probability of winning over time. It's not about being right every time. It's about having a small statistical advantage that, when combined with risk management and discipline, leads to long-term profitability. Think of your edge as your playbook, your framework for identifying opportunities where the odds are in your favor. To develop your edge, you need data and structure. Start by picking one market, one time frame, and one style of trading, whether it's day trading, swing trading, or long-term investing. Study it deeply. Identify recurring patterns, setups, and conditions that lead to profitable outcomes. Track your results obsessively. The goal is to understand what works for you, not for someone else on YouTube, not for the influencer flashing cars on social media, but for you, your personality, your schedule, and your risk tolerance. Your edge might come from price action, fundamental analysis, or a combination of both. What matters is that it's tested, repeatable, and backed by evidence. Don't just assume a strategy works, backtest it across hundreds of trades. Study both winners and losers. The goal isn't to find perfection, but consistency. Even an edge with a 55% win rate can make you rich if you manage risk correctly. Consistent profitability comes from understanding your probabilities and executing them without emotional interference. If you learn nothing else from this video, remember this. The key to staying consistently profitable is not how much you make, but how well you protect what you have. Risk management is what separates professionals from gamblers. You can have the best strategy in the world, but if you're risking too much on each trade, you're setting yourself up for disaster. The goal is to stay in the game long enough to let your edge play out. Professional traders risk small to stay big. They never put their capital in danger on a single trade. A typical rule is to risk only 1 to 2% of your account per position. That means even if you lose several trades in a row, you're still alive to trade another day. Consistent profitability is a marathon, not a sprint. The amateurs blow up accounts chasing one big win. The professionals focus on survival, knowing that compounding small, consistent gains leads to big results over time. Risk management isn't just about stop losses. It's about knowing when not to trade. It's about understanding that sitting out of the market is a position in itself. It's about accepting that capital preservation is more important than chasing every setup. The best traders think like risk managers first and profit seekers second. Their mindset is simple. My first job is to protect my capital. My second job is to grow it. Becoming consistently profitable requires, you guessed it, consistency. Most traders fail because they treat trading like a side hustle, not a profession. They trade when they feel like it, change strategies every week, and never track their performance. But professionals know that consistency in process leads to consistency in results. Every successful trader follows a routine, pre-market analysis, trade execution, journaling, review, and improvement. They show up the same way every day, even when they don't feel like it. Consistency is also about focusing on one thing at a time. Too many traders jump from Forex to crypto to stocks, trying to catch every opportunity. The truth is, specialization beats diversification when it comes to developing skill. The more you focus on one market and one approach, the more intuitive your decision-making becomes. Your consistency compounds just like your profits do. Discipline doesn't come from motivation, it comes from structure. You don't need to feel ready, you just need to follow your system. Over time, your discipline becomes automatic. That's how trading transforms from chaos into calm, from random luck into calculated execution. Consistency is what makes an average strategy profitable and what turns a decent trader into a great one. You can't improve what you don't measure. Every consistently profitable trader treats data like gold. They backtest every idea before risking real money. They keep a detailed trading journal to record not just results, but thoughts, emotions, and mistakes. This self-awareness allows them to refine their process and eliminate errors over time. Backtesting helps you build confidence in your edge. When you've seen it work across hundreds of trades, you're less likely to panic during drawdowns. Journaling keeps you accountable. It exposes patterns in your behavior. Maybe you overtrade after a loss or hesitate after a big win. Awareness leads to correction, and correction leads to growth. Continuous learning is another non-negotiable. The markets evolve. Strategies that worked 5 years ago may not work today. The best traders stay students forever. They study macroeconomic trends, new tools, and emerging market structures. They're always refining, adapting, and learning. Becoming consistently profitable is not a destination, it's a process of endless self-improvement. There are 3 stages every trader goes through: losing money, breaking even, and consistent profitability. The losing phase teaches you humility. You realize the market doesn't care about your opinions. The break-even phase teaches discipline. You start managing risk and following your system. The profitable phase rewards patience. Your results become steady because your habits have become solid. The biggest leap happens not when you find a better strategy, but when you become emotionally detached from the outcome of any single trade. You stop needing to win every time. You focus on executing well, not being right. You measure success by how well you followed your plan, not how much you made. That's when trading becomes a game of probabilities, not emotions. Becoming consistently profitable is not about speed, it's about survival, skill, and steady growth. It's about mastering the boring parts: journaling, reviewing, waiting, and managing risk. The irony is, when you stop chasing quick profits and focus on process, the profits start chasing you. Most traders give up right before they're about to turn the corner. They get tired of losing, tired of waiting, and tired of feeling stuck. But the truth is, consistency doesn't show up overnight. It's built one disciplined day at a time. Every losing trade you review, every pattern you analyze, and every emotion you control is part of the process that shapes you into a professional. Trading is not just about money, it's about mastery. The market is a mirror, reflecting your strengths and weaknesses back to you. It teaches patience, humility, and focus, lessons that apply far beyond charts and price action. Consistent profitability is not something you achieve once. It's something you maintain for life through awareness and discipline. If you stay long enough, keep learning, manage your risk, and focus on process over profit, the consistency will come. Not through luck, but through skill. Not through prediction, but through preparation. That's how real traders make it. That's how you actually become consistently profitable.